Hello guys. Okay, now this is the third video which I'm discussing about your intention to acquire a particular asset. I talked about the first time you're adopting IFRS, you might change from previous GAAP to the new IFRS GAAP. There may be changes which will be discussed in the upcoming videos. I will discuss more detail about IFRS 1. But now focus upon this concept. When you acquire an asset, you definitely might have an intention. In major cases, in most of the cases, you definitely have some intentions why you acquire the asset. Either you can acquire the asset to use in your business. It may be manufacturing, it may be rendering some services, it may be renting as well. Your business is for renting, right? Or what you can do is you may be used for certain administrative purposes. If this is the purpose for which you are acquiring, you should classify that asset that you've acquired as PP&E, which means first if you acquire an asset you need to filter it your intentions you need to filter your intentions through the definitions given in the IFRS, which means suppose I'm going to buy one car. Why I'm going to buy the car? I'm going to put the car on rent to various people like traveling agencies, and I will generate the revenue. Now it depends what's my business is. Suppose I'm dealing with renting cars, so it's a kind of it's definitely an asset for me, but it's using in my business, right? For either for rendering services or not for production. I'm using it for my rendering services, right? So it will cover under definition of PP&E. So when I talk about PP&E, the standard deals with PP&E is IAS 16, which deals with PP&E. Filter your intention, otherwise you might acquire the assets so as to sell them or to use them in your production, consume them in production. Then in such a case it will become your inventory, and for inventory IAS 2 is there. Now it's only applicable in case of land plus building. It's only applicable for land and building. If you acquire any land or building and your intention is like just hold it for any capital appreciations. What do you mean by capital appreciations? I bought capital appreciations or for rental incomes. Any of these conditions are satisfied, then in such a case it will fall in the definition of IAS 40. So why I'm discussing this? Your acquisition depends upon your principal activity and your intention. If your intention comply with the definition, you need to account for those assets as per the definition given, as per which definition it qualifies. Now in simple terms, what do you mean by capital appreciation? Capital appreciation means, for example, if majority of the people, if they have disposable income, what they're gonna do? They will invest in real estate. Previously used to do like this, I guess, in my time when I was a kid. Still I'm a kid. So what they're gonna do? They used to buy real estate. For what? If they are not dealing with a real estate property, what they're gonna do? They'll hold the asset and they will realize the gain after 10 to 20 years. For example, if they bought the real estate for 1 lakh rupee, now after 20 years the value might reach 1 crore. And their capital of 1 lakh rupees that they have invested upon the property will grow to 1 crore. That's what we call as capital appreciation. If that's your intention, then in such a case it will fall under your investment property. I'm talking about investment property is used at IAS 40. So it's your business, you adopt the first time, or you're a newly incorporated company. First time adopter might have PP&E. So your intention may be to use in business, right? If you have, just apply IAS 16. IAS 16 definition is given that use and for more than 1 year. Use in business or for use in business for consumption. not more than 1 year, will treat as inventory dealing with IAS 2. For capital appreciations or for rental, provided they are either land or building, then in such a case IAS 40 will be applicable. So this is the intention concept under IFRS.